Good morning, Michael. We are Monday. We are back live. How are you doing today?
Dude, I missed the show over the weekend.
Yeah, me too. Like on Saturday, I was
I
like,
missed it. I woke up and I was like,
exactly. So
"Oh,
many things to talk
there's
about.
no. What are we doing? There's no show today.
Exactly.
How's that
Such.
possible? Why is that okay?
It's
You know
not
what I mean?
okay.
It doesn't make any sense. Who was in charge of that, by the way?
Of the scheduling, yeah, we need to ask the CEO of another media. That's
Let's talk to that guy.
yes.
Let's let's welcome everybody back to the show. Welcome to AGTP Daily. As everybody knows, except for the weekends, we're live every weekday at 11 a.m. Eastern Time to discuss the most important tech stories and tech news that impact the United States of America. Today is Monday, the 6th of July, 2026. Let's get right to it, Martin. I want to talk about the Bending Spoons Nasdaq IPO. I really do. This is an important story and just a conversation that you and I should have out loud recorded, since we always talk about stuff like this
Okay.
privately. So I just thought, okay, talking about like buying companies, consolidating them in. I want a printing company. What are we doing? So that's what I want to talk about. I want the whole world to hear us talk about it. And then I don't know how we can have today go by without talking about HubSpot. I think that's enough said. People that know. People that don't know will know when we're done. And if we have time at the end, as always, we can talk about how AI native startups are changing hiring kind of across the board. How does that sound, Martin?
Let's go. Let's do it. Sounds great.
Let's do it. So Bending Spoons, which is a company started in Italy. Not a lot of Italian companies in the tech space go out there and then IPO on Nasdaq, Martin. We have to find one in France that's doing this. You think that's possible? Anyway, you know where Italy is, close to France?
Yes.
Kind of close.
They have
Anyway,
let's do the wine, let's do the cheese, let's do the meat, let's do the everything. But yeah, I see what it is.
but they just IPO'd on the Nasdaq. Okay, so Bending Spoons, it's weird, right? It's like one of Europe's most unusual tech stories. This is a company that buys, it's based in Milan as well, and it's not a fashion company, but it's a company based in Milan that buys established digital products, right?
Okay.
It rebuilds them inside of a central operating system. This should all sound familiar to you because we spend so much time, you and I, talking about this. And instead of like buying them like a private equity company or like, you know, BlackRock or whatever, selling them for spare parts, it actually takes them and says, how can we consolidate this, combine it with everything else we've already bought, and make it better? And what's interesting here is that, let's just give a little bit of information on the IPO. So the IPO priced at $29 a share, which is above the marketed range. So remember, Martin, we spent all this time with SpaceX talking about how they went out, did a roadshow, and people were like, yeah, we're not going to pay that much we'll pay X for it. And then we worry about OpenAI and Anthropic now, people going on and going, yeah, we're not going to pay $1 trillion for this company. But with this particular company, they went out, and I don't know where they were talking about pricing, but it was below $29. And on the roadshow, people were like, no, we'll pay more for that.
Okay.
And then people did pay more for it.
Nice.
They raised about almost $1.7 billion and at about an $18.4 billion valuation. And the shares, remember, we talked about this again in the context of SpaceX, but for people that are scoring at home, it closed up 40% on its first day of trading.
Okay.
Which means it closed at a $25 billion market cap.
Wow. Okay.
Yeah. Which, again, if you take away the context of like artificial intelligence this and artificial intelligence that, a company like most people have never heard of has a $25 billion valuation. So that in and of itself, I think, is just super interesting.
It is indeed very
Prima
interesting.
facie on its face, right? But can I do a little bit more?
Please do.
So this is not like a typical venture building company, and it's not classic private equity, right? So it's some kind of mix of this. In other words, it buys, and I'll get to the names of some of the companies that it bought because it'll ring a bell for most people. Essentially, its idea is let's buy things that are out of favor with existing customers that have predictable usage patterns and a place for operational improvement. So think about this. Evernote, have you ever heard of Evernote? WeTransfer, you've heard of them?
Yeah.
Vimeo,
Yes.
Eventbrite,
Yes.
AOL. I love the fact that they bought AOL. Since AOL at one point bought Time Warner.
Yes, they were huge. They were huge at one point.
What
right?
are we doing?
Yeah.
Okay, it also bought StreamYard. It's like all of these little companies you've heard of, you kind of care about, you kind of don't care about, but they pull them all together, and it has existing customers. Like StreamYard has customers, Bright Cove has customers. WeTransfer, I used to use all the time. Vimeo, obviously, video creation, you know about it. Eventbrite's an event company. AOL obviously is AOL. I don't know what they do anymore, but I guess if I type in AOL.com, I'll get something.
Yeah, it's true. Like, what are we doing?
But again, AOL's been bought and sold a bunch of times. But AOL looks more like Yahoo now than anything else. I mean, it doesn't look like it visually, but the business itself with like, it's just an online portal.
Just that it's news, yeah.
Yeah, it's got news, probably sports, probably finance and stuff like that. I mean, Yahoo Finance, people still go and look at it, right?
I was an AOL customer. Like, I think our first internet provider when I was young was AOL.
For sure. Yours and everybody else's.
Okay. Wow.
Yeah. Like my parents, I got my parents online by telling them to just like go to AOL.
Okay.
My mother's first email address, because she was like, I don't know how to do email. I'm like, Mom, just go and sign up for like your name at AOL.com, and then I can send you emails all the time. And she was like, fine.
Yes, I
She's like, can I email Martin Runford? And I'm like, I'm pretty sure you can. I don't know how she knew you, but whatever it is, whatever weird thing was going on, it's perfectly fine with me.
I was probably not born, but yeah. She had vision. She had vision.
She's a visionary. My mom was a visionary.
Exactly.
But here's the other thing. They treat themselves as the company Bending Spoons, which is a great name, by the way, like they're the product.
Okay.
And here's why. The assets that they acquire obviously matter to them, right? They're not going to acquire complete garbage assets, but they centralize all the stuff around it: centralized engineering, product redesign, monetization discipline, and any kind of like AI assisted software development. It all gets consolidated. Okay, and then they integrate all the companies together. Like Eventbrite gets integrated into Vimeo, into like all these things are connected to each other. So if someone's using WeTransfer, they probably have some instant or very easy connectivity to Vimeo, which works, right? We know this. And that's interesting. Sorry, were you going to say something?
No, this is really, really interesting because I think also they buy them at the moment where they lose money and they are like almost bankrupt, right? Like they don't buy them like when everything's fine. They buy them actually when they are doing really, really bad, and then they turn them, I guess, profitable. I don't know if all of their businesses now are profitable, but the company Bending Spoon itself, they reported $1.3 billion revenue in 2025. So it's huge. They are making a lot of money, right?
Yeah. So let's run through a little bit of these details because I do think they matter, right? So in the prospectus for their IPO, the company says that it served over 500 million monthly active users.
Okay.
And 9 million monthly paying customers as of March 2026. And those are portfolio scale indicators rather than duplicated individual users, right? So it's not like the same guy that's using Eventbrite is the same guy necessarily. They're counting individuals as opposed to dupes, right? So like if I use this thing and I use that thing, I'm not counted twice, I'm counted once.
Okay, that's interesting.
And here's the other, this way. Say it again.
That's interesting to count this way. Okay.
But they almost have to, right? Because otherwise it's, you know what I mean? Like if I use 5 of their products, I'm not 5 separate people.
Well, I know companies in the US who would count 5.
We count 10. Well, he has 2 hands and he uses a mouse in his left hand and his right hand. We're going to count that as 2 people.
Exactly.
He also has a middle name, which he uses. Sometimes that's 3 people. No, you know what I mean? It's like the metrics in the US is just so aggressive, probably, right?
Exactly. They are very true. So that's good.
And there's more, right? So the financial story obviously ends up being really strong. Revenue and operating income have grown a lot. And subscriptions represented 84% of revenue in Q1 2026. And they had operating income of $120 million just for that quarter.
Okay, wow.
And net income was $27.5 million. It's just the whole story here is arguing for like a new kind of software company, particularly one that like compounds by buying more products as opposed to having less products. And treating them kind of in the same way, but consolidating them and, you know, again, connecting them. It's weird, right? Because this is something that the portals tried to do years ago. This is why it's interesting to me that they own AOL.
True.
in the sense that like AOL was a consolidation of like an email provider, an internet service provider, like all these other little things. And now they're just like doing this at scale. Does that make
Yes.
sense?
Yeah, so I think that's the first thing. The first thing that's really interesting is that, but I think to me the super interesting thing is that they grew their company to that level, to IPO, before AI. So imagine today what they can do with AI. Like, let's assume that not everyone in the world know as much as in AI than they do. Okay, let's just assume that they are the best in AI implementation. They know very well how it works. They know very well how to create the use cases, to make everything super efficient. Instead of building a service company and then implementing AI into other people
Right.
companies, it feels such a huge opportunity right now to buy businesses that are doing okay, or that are even losing money, implementing AI inside of that, making it super profitable, and then 10x the business before everyone knows how to use AI, right? Like there's a window right now, right? Since the last 6 months, because of agentic AI, there are people who know really well how to use it. There are people who know well, and there is 99% of the people who don't know how to use it. And among them, there's a lot of companies who are scared. They are scared of cyber security. They are scared of governance. They are scared of like many problems to implement AI into their company. If you buy the company and you are not scared and you know exactly how things works, you have. It feels to me like it's a huge opportunity to just like implement AI yourself, make everything much more efficient, and all of a sudden it feels simple to me in a way to actually make a business much more efficient, much more profitable if you go from zero AI to a lot of AI into any business. So I think the fact that they have been doing that before AI and now AI is here, if they are really good at AI, I mean the window for them right now, like they should be buying everything. And so that's why maybe the IPO, to raise a lot of money and to just buy 25, 50 companies, I don't know, in the next 6 months and just 10x the company.
So they bought 50 companies in the last 10 years.
Okay, so maybe you're gonna buy 50 more in the next 6 months.
But don't undersell what you just said, and I'll tell you
Yeah,
why.
yeah. Tell me.
Well, because the first 3 or 4 years, they're just testing their thesis.
Yeah.
Right. And they're building a team. They're trying to figure out like, how can we be synergistic when we buy this company or that company?
Yeah.
But one of the things that they figured out was that they don't need the companies to be synergistic per se. So what does that mean? In other words, they don't need like a hamburger bun company and a hamburger beef patty company. They don't have to work together, but they have to be able to consolidate the assets that are inside those companies in a way that justifies buying them. And the main thing that they look at here, like, so there doesn't have to be like an overall theme. They don't have to just buy like event planning companies, right? They don't have to buy just like emails, like whatever it is. It doesn't have to be thematically clean. But the logic is they have to have repeatability. So a tech platform that works for all of them. And one of the things that they've done this is that subscriptions is the main way they do it. They just want to have, remember, we talked about this on a couple of our episodes recently. The most important thing, and look, you and I know this from our own business. What's the most important thing to us is predictability.
Yeah, for sure. It's really
right?
cool.
Because if we can predict out, and not just us, but if any company can predict out not just revenue, right, but like all these important aspects of their business, well, then you can just kind of let it ride and build more stuff around it.
Yeah.
And then use the revenue from that business to buy another business that also has predictable revenue, subscription-based businesses, and a business model that you understand. In a way, Martin, this is kind of like the Berkshire Hathaway.
Yeah, exactly.
Right. So like if you listen to Warren Buffett talk in the 90s and early 2000s, he's like, I'm buying Dairy Queen.
Yeah.
And people are like, Dairy Queen, who gives an S? And he's like, yeah, maybe, but I understand how it works. I understand ice cream. I know the components that go into it. It's never lost money. It's not going bankrupt. And it's a predictable business. And if I put a new Dairy Queen somewhere, people know the brand. They're just going to rock up and use it. And again, it's not going to make billions and billions of dollars, but it's going to make enough money with enough free cash flow to fund other things.
Yes. And plus, like on top of that, on top of that. So this is exactly the model, right? Like what you describe is exactly the model. But plus, I would say on top of that, in the thesis, right? Like how do they decide which business they buy? I think those guys, the founders, they must have, a really unique capability. They must be really good. For example, let's say one example, they are really good at optimizing the cloud hosting. Okay, so they can like take a company that's spending way too much money on hosting, and then they take this cost down because they are the best in the world at that. And when you do that, you go from very unprofitable to very close to profitability, right?
But then
And
also
I,
scale that across every
and
aspect and every detail of the business, right?
and
So
then
cloud hosting is just one, but
yes,
then,
yeah,
it could just be like
yeah,
buying computers. They could be good at like
exactly.
sourcing stuff. Yeah.
Yeah, and so I'm pretty sure that they have some really unique and very super high level key skills like this. And maybe also on the marketing side, maybe they just know better how to market a certain type of business. If it has a subscription, if it has repeatability, they know how to calculate the LTV, so the lifetime value of the client. So then they know how much they can invest into marketing. Like they know all of these things where they are
Exactly.
good at, right? And so then they just look at businesses where they can apply their playbook, right? And when you think about it, like for example, for us, Michael, like we don't know how to run every podcast in the world, but we know how to run a certain type of podcast the way that we do it, right? And so if we have a certain set of criteria and podcasts meet our criteria where we could apply our playbook,
Right.
we would be like, we should buy this thing because this is something that we can optimize because we know all the components are close to what we know what to
Exactly.
do, right? And so I think this
Exactly.
is
It's a
this
good
is
analogy, actually.
yeah, and so that's why I think like here it's really part of the story. They're not buying everything, so that's why when you say subscription, when you say this and that, they are really looking for exactly what they know and where they are good at, and then the businesses that match that, they buy them, they apply their playbook, and then it becomes much better, basically.
Yeah. And if you think about it, like, what are the public markets right now rewarding? Right.
AI.
Well, they are, but so just move
I
AI
mean,
off to the side. But before we get to because the AI is part of it, but like
mhm,
real companies that can actually show growth, it doesn't have to be insane growth, but just like not losing customers, right? People are
mhm,
worried that AI is going to take business away from like SaaS companies and a whole bunch of other stuff. And they're
mhm,
saying, look, here's a bunch of things where like AI can't sap the energy from these particular companies.
mhm.
They want them to be profitable and they want them to be able to scale. But then they also want them to have no artificial intelligence attached to them at all. So they
Exactly.
can then, this is the new part of the story, right? Because as you said, when they
Yes.
started 10 years ago, there was none of the same AI that exists today. But now, if
Yes.
they can get operating leverage out of artificial intelligence and apply that across, remember, they're building a machine. And the things that they plug into that machine, in a way, they're kind of indifferent. We already talked about this.
Mhm.
Thematically, it doesn't have to be the same. But if they can get the same leverage from artificial intelligence today, that company should be way more profitable. I'm just going to say 3 years out than it is today,
Yes.
because everything that sits on their platform is now going to get enhanced by the productivity that artificial intelligence is going to allow them to do.
Mm.
And that itself is going to multiply because the AI we use today is going to look quaint in
Yeah.
comparison to the AI we use tomorrow, even.
Yep. But if they are at the forefront, if they are at the edge, if they are at the frontier of how we use AI, they have a huge advantage right now. They
For
can
sure.
like
If real
they can
companies doing real
dominate.
business, not like
Exactly.
theoretical companies doing some theoretical business,
No,
they're
no,
like,
no,
yeah,
no.
we took Eventbrite and we attached AI to it. We took Vimeo and we
Yeah.
attached AI to it and got
And then
operating leverage from it, right?
yes, exactly. So maybe that's why the IPO, right? Like they want to get a lot of cash, they want to raise the value because they want to buy a lot of companies like really fast because they see the opportunity. Like really, like that's why it excites me the most. I'm like, yeah, if they apply AI to a bunch of softwares that are okay-ish, and they know better than the software's owner themselves, there is a window before everyone get organized and before everyone know enough about AI to do the optimization themselves. Don't sell them solution. Buy the company, implement AI yourself, and then you're gonna make way more money basically. So
Yeah, I
I don't
mean,
know,
the
to
reason why I
me.
wanted to have this conversation with you
Mm,
per se is because you and I have spoken about this as well. What are the companies related to where we do business
yeah.
with them? We know that there's an operating model there that can make them way way more productive? Shouldn't we just buy them, fold them in to the operating ethos that Undercover Media has? Whether it's a new, because remember, it doesn't have to be thematically the same, right? We talked about this.
Yes.
So doing, as you said earlier, if we see a podcast that's not being monetized properly, it's not being marketed properly, all the things that we know how to do, it would be easy for us to acquire that show and then apply all of our expertise to it and have it become better. But even if it's not a podcast itself, but it's somehow related to things that we do, where we have an operating knowledge as well, because we've either dealt with them or we can understand how those business works, but then we can still apply the Undercover Media operating model to it, then we should be able to make way more money.
Exactly.
And list on the Nasdaq. What are we doing? We have 5 years, right?
Exactly. Instead of doing an agency, instead of doing services, if you have the possibility to buy a company and then implement your playbook into them, it looks like it's the most profitable thing that you can do, right? So I think just after this podcast, Michael, would go look for something to buy, because
I already know. I know exactly where it is. I walked there one day. I'm going to walk there again, and I'm going to find out what it costs to buy.
But it's something online, something that we can manage online, something we can implement AI, something we can apply.
Well, we could put that company online. That's the thing. This is part of the operating leverage. We could take that company. It's not online. We could put it online and use all their operating assets. We could apply artificial intelligence to it. And then we could do if we wanted to, we could do a podcast about how you use that company. And then it's like game on for like making way more money.
Yes. I think there is definitely a playbook here that makes ton of sense. Like, I read a book like a couple of years ago, maybe now, and the title was what? How to Become a Billionaire, I think.
Yeah, but it was all about buying companies, yeah.
And it was all about buying companies and then consolidating them together.
Which is exactly what these guys have done.
Yes, so it's not exactly as I think this book was about buying like a bunch of companies who are doing the same thing and then making one much bigger company.
Well, this is a roll-up. This is a roll-up. And this is an easy thing to understand for most people, right? It's a typical operating model. What these guys have done is different. It's not a roll-up per se.
Yep. Exactly. It's slightly different, but it's the same type of vibe. So you go to acquire companies, you make them more efficient, and then that becomes much bigger. And here, I think where, once again, if they apply AI into these companies, it should be absolutely huge. They have a window before everyone gets organized.
Yeah. And look, it takes time to do this too, right? In other words, if we bought a company and if Bending Spoons buy a company, right? If you really want to deeply integrate the company into the machine that you've built, it's not just like an overnight plug and play thing.
No. There's a lot of challenges, huh? Like all the culture, first of all, like when you buy the employee, like they get to plug in with the rest of the team. You may also need to fire a lot of people, which is never fun to do, right? So maybe like just the people part might be one of the hardest, I think.
Yeah, and also just the discipline around time. Everybody wants sort of like an overnight success. Everybody wants things to happen immediately. And I think one of the things that these guys have said pretty explicitly is that doing proper transformation and particularly consolidating that into this machine that they've built of like, again, leaving the AI stuff to the side, but just like understanding how to monetize it, like understanding how to make it more efficient, understanding all these things. Because again, if you buy a company where the existing leadership thinks, oh, there's no more growth here, they get a little bit tired, it's no longer like the new thing, management then ends up being way less creative than they might have been in the earlier days of the company when they started building it. It was like a real thing. Like Evernote is like the perfect example of this.
Yes.
Where it's like, I remember I had Evernote and I used it and all this other kind of stuff, but it stopped like evolving, and I think the management just kind of gave up on it. And maybe Vimeo was kind of the same thing with like, I guess we lost to YouTube, so what are we doing kind of thing. But the assets there were pretty powerful. But you have to have a long-term view too, right? And, even for the stuff that we do, sometimes it takes time for it to come to fruition, right?
There's a lot of time before the world understands.
Yeah, before the whole world understands what you're doing. Like, that's not gonna, nobody cares about that until they care. And then it's just like,
Yeah, I mean, they were ideas that we've been pitching to our potential client of partner for years, and one day they just say, okay, now I get it, right? They just need like a couple of iteration, and sometimes it takes a lot of time before people understand. For sure, no, it's true. I mean, yeah,
Right.
or before you are able to sell it the proper way. Let's say it this way. It's not the client's problem. It's it's you who have the idea. We need to explain it a different way.
Right. So the other thing that actually becomes kind of significant here is you were right, right? In other words, there are some sort of social and operational tensions that come along with buying a company and potentially having to lay people off as you make it more efficient.
Mhm.
Right. And one of the risks I think that a company like this runs is that I'm just going to say last year as a proxy for not today,
Mhm.
nobody had really heard of Bending Spoons in a way, right? So if Bending Spoons came to buy your company, you couldn't be like, oh, these are the guys that are going
Yeah.
to fire everybody, but they're going to create a ton of value and all this other kind of stuff, right? So you just be like, you want to buy this for $1? Done, sold. You know what I mean?
Mhm.
They're kind of more under the radar, but they run the risk now because of all the publicity around them. Then now people are going to be like, oh, wait, our company fits the profile that Bending Spoons wants to buy.
Mhm.
Let us just hold out now for a little bit longer because maybe we can get paid more money. And then maybe we can do some convincing for them not to lay off like our key employees, even if they were, do you know what I mean? Things just get harder as you get more successful with this model because now people know your modus operandi, yeah, how you
I see
like to
what you mean.
operate.
Yeah. And also like they know your end game, right? So like they can maybe negotiate the price higher because they know at the
That's
end
my
of the day you're
point.
gonna make much. They are
So
going
you
to make
lose some
money
of
on
the
you.
operating
So
leverage because the
yeah,
price is high, right?
yeah, because then you lose. Yes, but on the other hand, now that they are more public, maybe they're gonna also have more inbound people who are gonna just call them and say, "Look, guys, I think we are a good target for you," right?
Right. Right. So
Maybe.
do you remember when we spoke to Philip Johnson about his e-commerce consolidation business?
Yes, yes, yes.
And this was one of the questions that I asked was like, don't you run the risk that like once you target somebody because you think that their ROI or their
Yeah.
potential return is good for you, that they're going to be like, oh, well, then our price is higher because now we understand how you work and we're not dying over here. Right. So instead of paying, you know, I forget what they were paying, but I'm just going to make up a number. Instead of paying like 4 times revenue, you now have to pay 8 times revenue, and that kills your business model.
I remember. Yeah.
Right. So you have to make sure now, like these guys could literally, and the time value comes in here as well because these guys could literally identify maybe 1,000 things that fit into their business model,
Mhm.
but they don't have time to deal with all 1,000 of them because this stuff takes
Yes.
time.
Yes. No, it takes a lot of time. A lot of time. Yeah.
Right. So I guess the real question here is now that it's a public company, and again, now you get into this reporting cycle too. Now they've got to do quarterly reporting and all those other things, whereas before they could just kind of operate under the radar.
Mhm.
And I get it. Like there are benefits to going public because you do get the benefit of raising capital,
Mhm.
which then you can use for more acquisitions.
Mhm.
And there's not a lot of talk, at least in the news that I've read, about these guys raising money.
Okay.
I don't know. Have you seen anything on it? I'm just saying I haven't seen it.
So you think they're like selling? That's an exit for them?
No, I don't think they're selling. That's not the point. But the point is that before, when they were acquiring companies, maybe they were either borrowing money
Okay.
or or they were using cash flow
Okay.
to buy like the next company. Now they have 2 companies that are creating cash flow. They can buy another company. Do you know what I mean? Like I don't know for sure because I haven't seen them raise capital because they're not like a traditional startup in that way, right?
Yes. Yes. Yes.
So
Yes.
going
Yes.
public allows them to raise. I mean, you said this like 1 point something billion dollars, which now gives them leverage to acquire other companies.
Probably. Yep. Yes. 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 To me, it feels like this. Just like once again, they know their business better than we do, but I can't imagine that they didn't see the AI agents absolute, breakthrough of the last few months.
Mm,
They probably started to implement it on their own, and they were like, "Look, we just made everything so much more efficient. Our model is all about efficiency."
mm.
Great, it looks like a perfect fit, right? Perfect fit.
Yeah, I mean, this
So,
AI thing could be a boon for them, right? Because,
oh
like
yeah,
you said,
huge,
previously
huge.
they had to create efficiency and productivity,
Yeah.
the old-fashioned way.
Exactly. They had, I don't know, to cut costs. They had to maybe redevelop things. I have no idea exactly what they do. They had to be smarter on marketing, maybe share teams between each companies, like do stuff like that. And that's the old-fashioned way. But now there is another way, which is implement AI in a company that has not implemented AI yet, right? So,
But again, they have 50 companies now where they can apply artificial intelligence. And if you think that they were getting more productive before artificial intelligence, what can they do now?
what can they do now? And that's exciting. That's really exciting. Really, really exciting to see how they are going to, like, what are the new target? Maybe also it will make the bar of possible acquisition lower. Like, for example, a company that were losing too much money before, and they would need, I don't know, 5 years, for example, to make them profitable. They may not acquire them. Just to give an example on the numbers, but now maybe with AI they can, you know, like get this time from 5 years to 2 years, for example, and now that become a potential acquisition target. So maybe like now the market of companies that they can buy is actually expanding. Once again, as long as the target company didn't implement AI enough and they can do more, right? If that's the case, then they can first of all optimize the target company much more. They can probably buy a bigger set of companies because they can do more optimization. And yeah, I just see that their business going to explode. Like, I mean, if they do all of that properly, it can be absolutely insane. I mean, it's gonna be super risky as well because they're gonna buy way more companies. They are going to accelerate because there's a window that's not gonna last forever. At some point, like for example, what Shamat does, right? Like with the 1890 companies, in a way, compete with those guys because he's going to help them implement AI into their company, be more efficient, maybe become profitable, and all of these things. So as long as there is not too much solutions like this or service provider, they can implement AI better than everybody else.
Right. So a few things you need to pay attention to here. The companies that they already have, are they still going to have organic growth?
Okay.
Right. Are they going to do that? Because they've been working with these companies for a while now, and they want to see whether like Evernote or WeTransfer or whatever has organic growth after integration, right?
Mm-hmm.
And the second thing is, as you mentioned, what I would call capital discipline. Now that they have all this money, how are they going to spend it? And they claim that they intend to buy a business and hold it forever.
Okay.
Not forever, but indefinitely. In other words, they're not buying something and going 5 years after we buy this, we're going to fix it up and then sell it out.
Okay.
Because the idea would be if they can make it more profitable and excuse me, and more productive, why would they sell it? Right? And that they want to use that cash flow that they get from those businesses, and this is why the capital discipline is so important, to buy more companies. So it should become this virtuous circle, as you were suggesting. They buy a company that's underperforming. They attach their entire system to it. It could take 2 years, 3 years, or whatever. But once they make it really efficient, then they say, let's take the money from that business now, or some of it, and go out and buy more businesses.
Yes.
Right? It starts to compound, right?
Yes. Which makes me think about Rocket Internet. Like, this is exactly the opposite of what Rocket Internet has been doing.
Sure. Find something that nobody else is building, build it, sell it, move on.
Exactly, right? It's like the exact
and do it
opposite.
super fast.
Exactly. I mean, first of all, find something that works and copy it, right? Like that's the whole thesis of what is internet, right? Like when they copied eBay, that was their first claim of fame, right? Like
Lazada was just a copy of Amazon.
Lazada, right? And in Europe they have Zalando for the shoes. So yeah, no, they use tech, copy something that isn't in the market yet, right? And then do it super fast to sell it to someone who's going to buy it. And sometimes the big player that you actually copied, right? Or one of their competitor. And Reddit internet is not liked, right? Like they have a pretty bad reputation. Like every time you see something about the founder of Reddit internet when they go somewhere, it's never really people who are liked every time they do something. Where these guys,
I love the way you're doing this. It's so like what's the right word? It's so diplomatic. They're not liked. People hate them. Are you kidding me? It's not even the opposite of not liked.
Okay, that's true. That's more accurate. That's more close to the truth, where these guys from Bending Spoons, I've seen them for like a couple of years now, and every time it's like, oh, that's amazing, they are doing great. Like the public opinion of them is really positive. Like people
Well, at some
really
level, they're
say,
saving things, right? I mean, Rocket
yes,
Internet was coming in and just like they were like a bandit
copying.
of thieves in some way,
Yeah. Are they still
right?
operating, by the way? Rocket
As a
Internet?
company, Rocket Internet itself,
Yeah, or like
I
as
do not
a
think so. But also, you have to understand, like Rocket was also building in an environment where the startup ecosystem in the United States was the only ecosystem in the world. The Rocket guys started in Germany, so in Europe, and they were like, none of this stuff exists here. Let's build it here. And then they looked around the world and said, where else doesn't exist? It was the Middle East, right? It was MENA, it was Europe. I mean, sorry, Africa, and it was Asia. And they
Europe
literally
as well.
came in and just raised as much money as they possibly could.
Yeah.
Went out and built and built and built. I mean, I know when they built Lazada, like in the first month, they hired 400 people. I've told this story before.
Yeah.
Because I know the people that did the hiring. So, but it was a different time too. Like you couldn't do that today. Even in the AI space, you couldn't build a company in 6 weeks and go out and hire 400 people.
Yes,
One, because the expertise doesn't exist, but two, because you're building into a completely different operating environment. Yeah. Like you couldn't do Rocket Internet today because there's not a lot of stuff there that hasn't already been built and invented in certain regions.
Yeah, it's true. It's true that they build on the internet, but at the end of the day, they build local businesses, right? Like Amazon, sure, Amazon is global, but that's because they have a bunch of Amazon local business, right? You have Amazon France, Amazon Italy, Amazon US, Amazon Canada, Amazon
Singapore, Amazon Japan.
Singapore, and they all have. It's a collection of local business that made the business global. But yeah, you're right. And now there is not that much that needs to be built anymore.
Not in the same way.
Yeah, not in the same. And so that's why, like, I think right now that's the present what Bending Spoon is doing. That's what you should do right now, right? Like this sounds so much better to me, especially if I'm right on my assumption with AI. Like if that's part of the plan, it looks like the perfect plan to me. Like that's what you should do.
Yeah, I like it. I mean, part of the reason why I like this so much is again, it corroborates private discussions that you and I have had about buying businesses, making, tying them into like a system that you already have for making money and business management. And then going out and taking the money there because you can literally fund the acquisition of the business out of the business itself. That's how you do the first one, right?
Yes.
Yeah, which is something else we've also talked about. Let's buy business A. Well, how do we pay for it? Well, we pay for it with the revenue that we generate from business A. And we just give it back to the people that own it. And then once you're done paying that down, then the rest of it's yours. And while you're doing that, you learn about how that business runs, but how businesses in themselves run as well.
Yes.
And then you can apply that to the next business that you buy. Yeah.
Yes. And especially in the tech world, we know a lot about tech and we know a lot about the internet. So if you stay in this niche, then you have a lot of knowledge that you bring into the table as well. And this is what they are doing here, right? That is a playbook that they bring is actually the knowledge that they have based on their experience. And so that's why they only buy a certain set of companies that fit a certain set of criteria where they can apply their knowledge and their playbook. That's key.
Exactly.
Yeah, but no, super cool, super exciting. It's not investment advice. We are not a stock market show, but I think I'll put some money on it because
say that again. You think what?
I think I will put some money on it because if I'm right and we're gonna apply AI, their business is gonna 10x in 2 years. Like it's gonna be insane. Like really. Like if I'm right, it's just going to be like they have a small window. Like yeah, it's not big, but if they already have a set of companies that they want to buy, the IPO to buy them, it can be fast. It can be really, really fast and grow super, super, super fast. So
it can.
I will bet on myself and think that that's the plan. And I will let you know in 2 years if I made money or if I lost money on that.
Well, why don't you give us a quarterly update whether you made money or lost money on this?
We need to give them some time, Michael. Like the time to buy the business, to then integrate it. Like all of that is going to take some time. So it's not gonna be a quarter or two. It's gonna be like in a 2 years bet.
Fair enough. Okay, we'll allocate some of your vast investment resources into Bending Spoons. We should start another company, Bending Forks.
Exactly. We shouldn't focus on podcast. We shouldn't focus on acquiring and making podcasts better.
We already have that company, actually. It's called Undercover Media.
True. That's right.
Because we
But
operate undercover. Okay, let's do this, Martin.
you want to talk
Let's
about the HubSpot?
segue into HubSpot.
Yeah. Yes.
I think we almost have to talk about this, don't we?
So this is super interesting. Like just after we talked about Bending Spoon, we talked about another company that actually could be a target of Bending Spoon. Like they are a little too big still. I think last time I checked, HubSpot valuation was 10 billion. They lost how much, Michael? They lost. I don't want to say.
Are you talking about their stock price?
Yes.
Did you say this afternoon they lost like 59% of their valuation this year alone?
65 in 1 year,
That's what I was thinking.
49 year to date.
Yeah, year to
So in
date.
6 months, they are valued 9.9 billion. They are a big software company. They have a big name, big brand. Everybody knows them, but it looks like they are doing really, really bad on the operating side. So
let's actually back up for a second. What does HubSpot do? It's a customer platform for companies that want to manage marketing, sales, and customer service, content, and customer data all in one place. So it's more than just like a CRM. It's a CRM that then does other things. It says, like, if this is your customer, then you should do this thing. It's like at its core, it wants to ask you, like, who are your customers? And now that we know who our customers are, where are they in the relationship that we have with our customers? And then what do we do next? Right? That's kind of like the key. I know it's simplifying it a little bit, but that's kind of like what HubSpot does, right? They have a marketing hub, they've got CRM, they've got sales, they've got some other content as well. And they're building this all in. But are they making a ton of money now? Not really. Not really. But would you want to talk about like what drove this story to come to the forefront?
Yeah, you're right. Sorry, I jumped directly in like the
just started
analysis.
doing. You've learned way too poorly from me. You just went right to the analysis because that's the fun part.
So
I have an opinion. Is what you were thinking.
Exactly. So very sorry, Michael. Please go ahead with the news. This is a big news. That's absolutely crazy. So let's talk about that first.
So HubSpot tried to update its sort of enrichment and data use terms around a new idea they had around prospecting and data enrichment capabilities. But they do have a ton of data, and HubSpot's been around for a while, right? But their main idea here, at least in the thing that we're talking about, was how do you improve contact discovery by using professional enrichment signals to make the stuff that's in your CRM more accurate, and then making your outbound outreach actually more relevant. But because again, you can have a CRM filled with like data and information on it. First of all, is all the data right? Is it updated? But also when you outreach to new clients, is the outreach you're doing relevant based on just the information that you have? And they framed this as a way to like move prospecting away from just like we have a list of customers, it's just generic, and towards more like better timed and, like I said, just better informed customer engagement. But the way they went about doing this and the way they went about announcing it was terrible.
So
really terrible, because what they said was, and they've always said this kind of like, you own your customer data, we just kind of host it for you. But what they were kind of implying or inferring here was that like, well, all that data sits on our servers. Maybe we can build a business around telling you what everybody else is doing with your customers. And people are like, yeah, that's not the plan. Sorry, go ahead.
No, so just to do like a practical use case, because this is something that I do myself a lot, right? Like, for example, when we want to reach out to a guest and we want our guest to be on the podcast, then we go to this data on an enrichment platform. We don't use HubSpot, but we use one that's doing the same thing. And we say, hey, what is the email address of this person? And very often they get it. They have it right? And so then when I have the email address of the person, I can send them an email. Basically, okay? So what happens here? When I send this person an email, okay, and then I say, I save into my CRM, okay, this is the correct data from this person, okay, or even worse, I know the person personally, okay, like I asked him to send me his email, and then I put his email manually into the CRM, and I say, okay, this is the email of this person. What HubSpot is willing to do right now, basically, is to share this information of this email is correct, that's the email of the person, across all the clients of HubSpot. Okay, so they say, now we are going to share all the data from all the clients. So which means if Michael then comes to HubSpot and asks for the same email, then HubSpot will come to my database and then give the email to
Yeah, but I mean,
Michael.
think about this, Martin. Let's say you build a CRM for just like carbonated sugar-based drink companies. Okay, and as part of that CRM, it includes like the secret recipe you use to make your carbonated sugar-based drink. And you're like, okay, so now like I can start a drink company and I can use Coca-Cola's recipe for my drink. That wasn't Coke's plan when they put their recipe on a system.
Yeah. So that's true. Like if you extrapolate that to every system in the world, that would be absolutely insane. But here they really focus just on the people email and data, like where they work,
Yeah,
like
but it's not
what is
fair,
their
right?
job
Like
and
if
things
you
like
do
this.
all
Yeah.
this work for data enrichment on your CRM,
Yeah.
like that CRM is not an operating layer for every other company that's using the same CRM that you are. Do you know what I mean?
And
That's your proprietary data, yeah?
and also the companies who are going to access this data, that you put yourself into the CRM of everybody, right? Because that's what HubSpot is saying right now. They are going to pay for it, right? So that's actually a business line for HubSpot, because they sell the enrichment. So if I have the email address of Bob and Michael wants the email address of Bob, then Michael is going to pay HubSpot to pull from the network that database the email that Martin has added to it, right? And so this is what is very tricky here, because at the end of the day, HubSpot is making money reselling clients' data to all the other clients, and your competitors can get access to the data. Everyone can access to the data. So now you're like, do I really want to put my data into this CRM who's going to share everything with everybody else?
But also, like, what is the, and again, it's a rhetorical question, but I'll answer it myself, but like, what is the key thing that any business has, particularly when they're dealing with your data? Do you know what I mean? What is it? It's trust.
Yeah, it's trust, definitely. Yeah.
I mean, it's not even partially trust. It's like completely trust, particularly for an online business. It's like if I take some information that I have or an idea that I have, because what if you're putting ideas in?
Yeah.
And they're like, okay, well, Michael's ideas are generally good. I'll pay $1,000 for every idea of Michael's or for Martin's or whomever's. And that turns into like Uber. Do you know what I mean?
Yes.
Like, what are we doing? That's not what this is meant to be. And once it's not even a leak. And the other thing that they did was they made it like they said, we're changing our policy. But again, think about these customer service policies that they have. You know, Apple does this all the time. Our terms of service have now changed. You're like, okay, I'm not reading 4,000 pages of like legalese. I'm just going to say okay because I still want to use my iPhone, kind of thing, right?
Yeah, so that's exactly why there was this huge backlash, right? Because basically HubSpot did that and opt-in everyone, because
That's my point.
Because it was not like that before, right? Like before July 1st, your data were your data in HubSpot, and then on July 1st, they changed their terms and condition, and somebody must have read through it and discovered that they were doing this data sharing network now, and everybody was opt-in by default. You could still opt out if you want, but people were super mad because it was opt-in by default into something that you didn't want to participate in, basically, and which is really, really bad.
I don't like this automatic opt-in thing for any kind of business, right?
No, and so thankfully they reversed it on July 5th. So yes, yesterday on a Sunday. That's interesting.
But the bigger question now is like, you know, HubSpot is not the only CRM company out there.
Nope.
So what does it say about, like, is the role of a CRM company actually changing?
I mean, I think that goes to the question of a valuation, right? They lost 49% of their value in 1 year. So
yeah, but I mean, is this one of these things where, like in the old days, you wanted to have somebody build a CRM for you because it was impossible to build yourself? Like, this is just the first question to ask. But the second question is like, can you not go out and, I don't want to say vibe code this because, again, it's a term that I hate, but is there any proprietary sort of knowledge around building a CRM? It doesn't seem like it, does it?
So yes and no, I would say. Yes and no. It really depends what you do with your CRM. Like the best thing that you can have is when you have a system that's fully integrated. And I remember
Integrated
using
into what, though?
like fully integrated into your workflow when you can have everything at the same place. So for example, Hubspot, like a really good thing that they were doing like back then, maybe like 5, 6, 10 years ago, was to give you the CRM for free. So they were not charging you for the CRM, but that was a
Right.
free feature.
Well, partial
Because
usage of it, right? Because I tested Hubspot years ago, and it was like you can use most of it on the
yes,
CRM
like
side. Sorry,
but
go ahead.
but you had like a bunch of features. You could go very, very far without paying
Yeah,
for
fair enough.
anything on the CRM side, on
Yeah,
the
fair
sales
enough.
side. But then, because you add all of your data there, you may want to use their email addresses. You may want to use their marketing plan. You may want to use their this service and that service and this service. And that was pretty much the funnel that they implemented.
They
CRM
built,
for
yeah,
free.
fine.
And then you had all the enterprise seats. And I say enterprise because HubSpot is an enterprise product. It's super expensive, right? It is thousands and thousands of dollars
Yep.
per person, right? And it's really like out of touch, I would say, for a lot of startups or a lot of SMEs who just use the CRM for free, or maybe just use something else because now you have an
Well, it's
option
too
that's one
expensive.
hundred
It's out
dollars a
of reach for
month.
a lot of people because, like, if you're a startup,
Exactly.
you can't afford to be able to
Yeah.
use it, and it's built on an old technology stack as well, right? Because
Yeah.
HubSpot,
Yep. And so when you are an enterprise and you pay $1,000 per seat, so per employee, maybe across 1,000 employees, right, to use like the marketing and the sales and the CRM and blah blah blah. Now we're talking about $1 million a month. So yeah, now the question is, can we build this thing with AI, right? Like now there is like a huge incentive, and so I think this is what's happening to these companies is like they are completely like overpriced. It's just absolutely insane the way that they have priced their thing for years, and because they were this integration that was really useful, and at the end of the day, you use them, you pay them expensive, but you make money thanks to them. So
right?
that's kinda okay, right? But they were really, really, I think, on the edge of like our clients make money or don't make money. They were super, super, super tight on their pricing. They were really profit matching for like 10 years. But now when you spend a couple hundred of $1,000 or $1 million a month on Hotspot, now yes, you are going to say, okay, maybe we are going to rebuild this thing with AI. It's not going to be that long, and we will be able to integrate it better with all of our systems. So I think this is part of what's going on here, and part of what's happening.
But also, this company was founded in 2006, so just
Yeah,
imagine
it's
the
been a
tech
while.
stack that it's built on.
Yeah, it's been a while. It's been a while. And I think actually what's happening to HubSpot is pretty much the same that's happening to Shopify. Because
Oh no, we're back to bashing
no,
Shopify. Go ahead.
yeah, we just put them in the. I mean, maybe it's worse actually for HubSpot, and that's why they already lost 50%. But like the revenue of HubSpot are actually growing. 2023, 2.17 billion, 2024, 2.6 billion, 2025, 3.1 billion. And here, first quarter of 2026, they have 24% increase year over year. So it's growing. I have no idea like exactly what they launch, what they are doing, and how they adapt to the market, but it's growing.
But
And
nobody likes this stock.
still they lost 50% of their value. So which means to me the way I see that is because HubSpot, even though they are growing, maybe they still have some users, even though I'm not sure if that will last a long time, but they don't participate in the AI race at all. Like they are left out, right? Just like Shopify, right? They can't do anything because they can't sell chips, they can't sell compute, they can't sell AI models. And right now there is no use case for implementing AI into a CRM besides Slackbot, which is absolutely insane. But besides that, and you need to be Salesforce to have access to Slack. HubSpot doesn't have Slack. Like there is no use case that just say, hey, HubSpot is able to actually just absolutely dominate in the AI era. right? There is no real good key advantage of being HubSpot that you can implement and no one else can do, basically. So,
But also, HubSpot's market cap is like $10 billion,
yeah,
as you
yeah,
said.
yeah, it's tiny.
So, the one thing that they didn't build as well?
Tell me, data
Their own data
centers.
centers.
Yeah, they don't have all the data centers. They're
They're
built at
completely
AWS.
reliant on other people for their infrastructure.
Exactly. And today, if I'm an investor, do I want my money on HubSpot or do I want my money in Bending Spoon, in AWS, in Microsoft? Like, which one do you think gonna make you more money in the next 5 years? Right. So
Yeah, I want to see. Just give me a second. HubSpot stock price. I want to look at a 5-year chart of it. It looks terrible.
yeah.
Yeah, it
You
looks
see like
terrible.
minus 67% with
Yeah,
minus 64 in just 1 year.
yeah,
And
yeah.
with
It's
minus
terrible.
49 in 6 months. So it's really this year. Like it's really, I think that's agency AI really. Like that's the only thing that's changed. Like, right, they didn't lost all of their clients. They didn't become a bad
No.
like a bad company in just 6 months after 20 years of operating, right? No, it's really agency AI that just first of all create a lot of FOMO, I think, for the investors. They want to make money out of it, and HubSpot doesn't participate. And second, as Max said, yeah, like a company like 8090 is doing exactly at this market, right? That was my analysis, right? Like that was my analysis where 8090 is not for the tech guys, it's for everybody else to make a software of one and just to be able to build your own CRM and to build your own thing, even if you are not a tech guy. And if this is true, then this is exactly the market of HubSpot. Your sales guy, they don't need the CRM for HubSpot anymore. They can just build it themselves with 8090. This is just game changer if that happens. Yeah.
Right, and you make an interesting point, right? Because you said the revenue is still increasing. Again, it reminds me of BlackBerry.
Yeah. Okay.
Right, where like the revenue is still increasing even after the iPhone came out, but only because of inertia, right? Not because of momentum. And I'm just looking at it. On January 31st, 2025, the stock was at $779. It's now trading $194. Just feels like it's in a different universe. And part of that is what I'll call sector, it's not all of it, but sector rotation, where people are just like, if I own $1 million of HubSpot shares, and if I look at the chart over time, it's made me a decent amount of money. But is it going to continue to make me a decent amount of money? And maybe one of the things that happened was at the beginning of 2025, people started making a decision en masse, in other words, together, that said, the money that I have in this has already made me a lot of money, but what's the next thing? And the next thing is not HubSpot. It's not CRM companies, because these are completely replaceable, whether it's through 8090 stuff or just like you do it on your own, right? But they sector rotate out of this, and then they sector rotate into NVIDIA or into Microsoft or into other companies that are in the AI space, because this is no longer the future. Yeah. There was a time when HubSpot was the future, right?
Yeah, I think
same thing for Shopify.
10 years ago, right? Like if you go back to 2015, it was super, super hot, right? And yeah, so
very hot.
They IPO'd in 2014. So yeah, so I was not far. So yeah, 2015, it was like the software to be in, right? It was like the thing, and just like Shopify. And so that's why I think they are just victims of what did you say, like this like the rotation?
Yeah. Sector rotation out.
Sector rotation. They are just victim of that, and they don't. And plus, there's threats like 8090, but I don't think that's priced yet, because I think this is like pretty new. All of these things. I think it's like it's also like if you are not in the tech bubble, I think you have more. I think it's pretty hard to imagine yet what we can do in AI, especially in enterprises. But if 8090 is working well and people start to price it, it's just going to keep going down, no? Like really, really bad. No?
Yeah, and again, people take their money out of, let's say, they take it out of HubSpot and they put it into a SpaceX IPO, or they take that money out and wait for OpenAI or Anthropic to IPO, or they see what's happening in 8090 and think, let me invest in a company like that, even when it's still private. So let me give that money to a venture cat. Like there's just so much stuff happening in the money part of this market. What is going on? I also see that Max was mentioning Adobe. Do you want to talk about this at all? Because it's in the kind of in the same context, right? They also feel like they have all this customer data too. Go ahead. Do you want to talk about this?
I think this one is really, really interesting because in a way, I mean, first of all, let's just check like the charts. Like, where are we on the Nasdaq for Adobe? And then I will tell you what I think. Oh yeah. So 5 years minus 63%, 1 year minus 42%.
For which company?
For Adobe.
Wait, 5 years what?
5
minus
years.
40, minus 47%, yeah.
I have 43. 63 sorry, 63 on the Nasdaq. Do you have the Nasdaq? Because there's like a BKK one.
I'm looking for their real-time stock price on Nasdaq. Go ahead.
Oh, really? We don't have the same one.
No, we don't.
Okay,
it's okay. Now I have it.
Okay, perfect. So yeah, so 5 years minus 63%, 1 year minus 42, year to date minus 34. So it's
also, if you look at the stock chart, Martin, go to the maximum view. This is actually where things get really interesting. You can see it trades sideways for years, spikes super high, spikes super low, goes back up, and now it's drifting downwards. Go look at the Shopify stock price for Max.
That's exactly the same, right?
The gap is a little bit different, and then go to Hubspot as well. It's kind of the same thing.
Oh wow, okay. Yeah, they all like the massive exit moment during COVID, right? Yeah. Like COVID was a massive exit moment for all of them. Yeah, I mean, Michael, like the chart is more spread out on Shopify because Adobe IPO'd in 1986. So it goes back to 1986, the chart, where IPO goes back to 2015. So that's why there's like 30 years extra of just like
a little bit more data.
A little bit more data. But I think that if you look at the spike and then the downfall, it really like follow the same dates. And that's really COVID that created a lot of, I don't know, weird thing, right? Like every price was so high during COVID.
Yeah.
And then it just went back to the normal price that it was before COVID for all of these, for all of them. But so yeah, so that's the state of Adobe. The reason why I say it's interesting because this is the only software that I'm still paying. I didn't find a way to replace it. Like everything that I've been trying, and really I've been building a lot of stuff, right? Like all of the other software that we use, I've been able to replace them. But Adobe is still way more powerful than anything that we can do with AI. Is it going to change? Is AI going to get better? Maybe, but as of now, it's not the case. We still need Premiere Pro. We still need Photoshop. We are still really, really far. And Adobe has a strong brand. They are still valued at $86 billion. They have a strong brand. They have this ecosystem of apps that works really well together. Like really, it's like when you do something in Photoshop, then in Adobe Premiere, then even in After Effects, for like the big, I would say like content creation apps, because then they have a lot of other apps as well. But for the main one that I use, really there is nothing like that. There is nothing like that.
So one of the reasons why we keep using Adobe is because we still trust them, right?
And plus, we really trust them as well. And plus, also the one thing that I love with them is that the software didn't change much in the last 10 years that I've been using it. So which means when you have a workflow that works, it works all the time. Like the trust that we have towards the software is really, really high. It just works all the time. It's very high quality, and just things are just, I mean, when you are in an enterprise environment, that's what you need, right? You need trust, you need
predictability and stability, right?
Yeah, and that's really what you need. And Adobe is amazing at that. Like really, every time they do an update, it doesn't break anything. They don't change something that was super important for you to put a new button. Like really, this is really good stuff. And even if right now we don't use it as much as we used to, I still can't stop the subscription because we still need it just one time or two time and nothing else can do it. Maybe as of now, that's true. Maybe it's gonna change.
And Adobe creates so much unbelievable collateral for us. It cannot be
Exactly.
created any other way. If you look at the collateral that we're producing, it's beautiful, and that's
Yeah.
obviously there's a design sensibility there that our massive IT team has and our massive marketing team has.
It's the head of design who's doing that.
Yeah, the head of
Inside the marketing
design's
team.
pretty incredible. But the point is that without Adobe, that's going to be hard to replicate, right?
Yeah, and then you have to change all of your workflows. Like it's, and plus like here it's even harder, I think, on the video editing side, on the creative side, to switch from, for example, Adobe to DaVinci, or from Adobe to another one, because just like when your workflow works, and when you know where all the buttons and all the capabilities. Plus in Adobe you can also create your own plugins.
Mhm.
So that and so actually I think in a way Adobe could have a massive growth, because the the barrier to entry to create this own
So,
plugin is so much lower. Now it's
so
so
is,
much
is,
easier.
isn't Adobe like the Salesforce of the creative world in the sense that,
Yeah.
Salesforce was marginally harder to use before they literally rewrote Salesforce 360, and now everything's API callable and everything's MCP compliant. And Adobe's been very good at this as well. So you don't necessarily have to be inside the system to use it. When you want to, you can be.
Yeah.
But otherwise, you can use Adobe through agentic AI to create stuff for you in a way that wasn't possible before, which again makes regular users way more powerful because the system itself is so powerful and so creative. Yeah.
Yes, and that's my use case. That I was paying for plugins around Adobe to make Adobe better, and
Right.
then I stopped paying for them because I use Cloud to build the plugins, right? And
Right.
then
Right. Because that's buildable, but
just
rebuilding
that's
like
buildable.
Adobe Photoshop, good luck.
Good Lord, there's just so much nuance, right? Like here we are really talking about the market of expert that need the nuance, that needs like all the little extra tools that you need, right? And even if AI can help you access tech, AI is still really, really far from actually being able to edit a video, add a shader, add some music. Like none of it is any workflows, right?
No, 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 no.
And AI can generate videos, but that's a different story between generating videos than editing videos, and color grading and sound effect and all of this. It's really hard. It's really,
So
really hard.
why are we making a
So
comparison between what Adobe's doing around AI personalization and what HubSpot did in selling, in using the CRM as kind of like an underlying layer to then sell that information to their other users?
I think that's because they both lost a lot of value on the stock market. What do you think, Max?
But again, it
Yeah,
appears to me that
yeah,
so HubSpot's controversy is like whether customer enrichment data from one account could be added to their commercial data set for HubSpot itself, and then they could sell that data on to other people. Yeah.
yes.
But Adobe seems to be moving in a similar strategic position. So AI personalization built on richer customer data, but with like guardrails in place so that, it's probably not automatic opt-in. It's probably like they see what everybody else is doing, and maybe they can then build some enterprise governance around this, and then obviously have audibility and consent around what they're doing with their other clients. So like if I'm doing super creative stuff inside of HubSpot, I mean not a HubSpot, inside of Adobe, and I use that for my own personalization, I'm clearly going to opt out for them to give. Maybe Adobe's just like built better systems, even though the idea was kind of the same. Because there may be some people out there are like, I don't care if people see what I see, and if it helps the company that I like make a little bit more money, so they can provide better service to me, then fair enough. But I think again, it gets back to this trust thing. It's like, I don't want you sitting on my couch when I'm away on vacation unless I've explicitly given you the key and asked you to like feed my dog. Do you know what I mean? When I'm away. And I think that seems to me like more like what Adobe's doing, whereas it feels like HubSpot is like, I don't know, he's at work and he gave me the key. Maybe I'll just go sit on Michael's couch while he's there, and I'll just clean the couch so when he comes home, he just doesn't know that I was there, kind of thing. I don't know.
No, yeah, no, definitely. And Miles shared with us some interesting example. He said
Yeah,
to
go
us,
ahead. Talk about this.
Adobe is screwed. I just used Claude to make a small ray tracer for a work project. It nailed it. It's not the same as Vibe Code in Photoshop, but it's coming. Claude already has created a C compiler. Yeah, but yeah, I think this is part of the discussion about Adobe, right? Like, it's absolutely possible. It's absolutely possible. I wonder I wonder if the best way at some point to get our video editing or our image editing done is going to be to do everything into Claude, so which means Anthropic has to build all the capabilities to do something amazing at the professional level.
Mhm.
Or is it going to be for Entropy to say, okay, we are good enough now, but we are going to just integrate ourselves with Adobe and then make sure that everything you say in English to Claude, you actually can do it clicking the button basically inside Adobe suites of product for you. And if I remember correctly, Michael, like Adobe and Anthropic a couple of weeks ago announced like a partnership where Claude could actually talk inside the Adobe's app, right? Like they
Yep.
like
Yep.
they had started to build the integration. So I really wonder, like, for the big stuff, what route is it going to take? Are they going to build everything into Claude? Is it worth it? Or is it just better to just integrate into the Adobe product as we announced a couple of weeks ago? Yeah, I think this is a lot of questions, but on this one, I wouldn't put my money neither on growth or death. I think there's a lot of uncertainty on Adobe.
Right. So again, my feeling on this is you can build individual features, right? This
Yeah.
ray tracer, but that's more like the plugin stuff that it's not a plugin. I understand that, right? But that fits into the more of like the plugin category. What Adobe does at scale, I think is going to be really hard
Mhm.
to replicate over time. Because again, while we're copying stuff that they're doing, they're also adding things. And they're making their system like better and more efficient and more effective. And they're also doing integrations, as you said, with Anthropic and with OpenAI.
Mhm.
That makes me believe that Adobe still has a little bit more life left in it.
Yes. Also, that they have potential. I think
Yeah.
out of all the software company that we have talked about, like,
Today.
I don't see like how Hubspot or how Shopify can participate into the AI race, but for Adobe, it's very different. Like, if this idea of the MCP servers to connect to Cloud or to OpenAI to
Yeah.
actually edit in English, or yeah, do like video editing or edit in Photoshop in English, and then use the power of the software to actually do it for you. If that works, that gives Adobe a whole new market to
Yeah,
access,
I
right?
agree. I
And
agree. I agree.
and this is really, really big, because now we are talking about AI as an enabler to actually access like very advanced and professional softwares. So yes, I think they have a chance. I feel like they could be doing something. And once again, I just can't get rid of Adobe. And believe me, if I could save the subscription price, I would definitely do it.
It's not that. Adobe's not cheap,
Yeah.
actually.
No, it's like we are on the $100 per month plan, right? Like, to have access to all the apps, because we need
Right.
we need all of them.
Yeah. Yeah.
And yeah, I didn't find a way to replace them. So in a way, I'm happy if Claude can do it. Max, if you can explain to me like how you did it, and if we can edit everything we do into Claude, and I can save some money, perfect. I would be super happy to. But I feel there is still chance for Adobe to actually survive and pivot in a way, become a different company, and then do something cool. Also, like, let's maybe not forget about something else that Adobe is doing, which is the cloud hosting for the project, which help with collaboration. And this is super important when you work in teams and you have, for example, 3 video editors on one video. You really need to have a tool that can actually say, okay, Bob say to change this, Hannah gave feedback to this timeline. Like, all of this is really, really, really hard to do when it's not inside a very beautiful tool that can actually help you do that. And Adobe has that feature where they host everything in the cloud. They collaborate with every person in the team. And so I can imagine this feature being implemented at scale into a large enterprise, and that's going to be really, really, really hard to go around that, to change the workflows, because it works really, really well. That's Adobe, that's great. People are not going to be willing to change just for $100 per month
No,
subscription. It's not
and
high
imagine a
enough.
situation, Martin, where a company has like an office in, let's just say, in New York, in Tokyo, and in London.
Yeah, yes.
And three people are working on a project that requires them to use the entire suite of Adobe products to do this sort of creative project.
Yeah.
Just rebuilding that again, just rebuilding the cloud infrastructure to be able to do that, and the version control,
Yeah.
right? Because again, if I make a change on something and you're like, I didn't want to change that, like you can't be like, well, oopsie, I saved. You know what I mean? Like you have to have version control as well. It's like, can we go back to what we did 3 days ago?
Yeah.
Like that's the sort of hard part of the nuanced part
Exactly.
about building. It's not just the editing of the video or the audio, it's or the image, or even just the image creation. It's more just like all these little things that go, because a CRM is much easier.
I mean,
Yeah.
we built our own CRM. Actually, like before I built our own CRM, I was thinking like, okay, what do I use? Do I use Apollo, where I get my data from? Do I use Hubspot? It was part of my list. And then I was like, you know what? I'm just going to rebuild it. And I remember it took me like maybe a day, and it was done basically, right? So
Because the CRM is so much more non-dynamic.
yeah, no, once it's done, it's done. But then it's really cool also to have it in house, so then you can customize it to exactly what you
Sure.
need. And this is really, really, really cool, right? Like that's really the
Right.
biggest benefit we
But
have.
also,
Is
how much
exactly what they need.
customization do you need on the Adobe side? And the other thing is that so many companies have gone out and built everything from like, you know, Pixelmator to Canva to all these companies that tried to like kill Adobe, and it's up until now it's been unkillable.
Yeah, no. They operate on the in the enterprise market, the professionals will need something that's reliable and that just works. So that's why I really don't know. Like it sounds like we are super bullish on Adobe. I definitely hear the possibility that Claude can build something and then we just do everything into Claude. I think both are true. That's really one thing that I really don't know for Adobe. Let's just see how it goes. But I think they have a chance, and I would love for them to actually grow bigger because I think that's a good company that I've been paying for maybe for like 15 years now. I have a $100 subscription. I feel I'm a shareholder. I should have some stock
You should
into
have some
Adobe.
stock in it.
It's been so long that I'm paying for it.
Maybe Adobe should have that thing where it's like if you own stock in Adobe, you get to use the product for free or at some
That
kind of discounted level.
I should have done that then 15 years ago then. Yeah.
Um, yeah, I mean, I don't necessarily want to spend a lot of extra time talking about Adobe, but I do feel like this is one of those companies where, because if you think about it, right, like big production movie houses use Adobe to edit their movies.
Yes.
And they're not just going to vibe code that into like, you know what I mean? They're not going to give that to Claude and just be like, I don't know. Let's take The Irishman. You know what I mean? Like Scorsese's not going to be like, I don't know, just vibe code that for me and we'll figure it out later. Like that's not going to happen, right?
Also, like, like if we go to the movie thing, we could do like a little digression on Unreal Engine as well, because Unreal Engine is a little bit on the same type of software. It's fully a software, but it's so advanced and so complicated and only used by like big video game studio and movie studio and like people who are doing big stuff, that the possibility of failure at this level is absolutely zero. You need Unreal Engine to work every day and to be able to do everything you need. Plus, you need really strong machine to be able to run this. So yeah, it's 100% a software, but is it going to be replaced? Like, I mean, this is going to be complicated. Like right now, I see a lot of people who integrate Claude inside Unreal Engine because it's so complicated to use Unreal Engine. You need that to spend, I don't know, hundreds and hundreds of hours clicking everywhere to have an idea of like how it works. And integrating Claude into the software to actually talk to Claude in English, and then Claude is actually doing it for you, is just so powerful. It unlocks a new set of feature that you just didn't know about, and you didn't know how
For
to
Unreal
use
Engine, yeah.
them. Yes, for Unreal Engine. And so this is really, really strong. Like, so that's why we should imagine this type of hybrid approach where AI is just used as a way to control the software, but then all the heavy lifting is still done by the software itself. And that's the same thing for the Adobe products, where I don't use Claude because I know the product's good enough, but I can imagine that for a bunch of people, they could do the same thing that I do with Unreal Engine. So yep, let's see how it goes.
I just don't think Unreal Engine is going to get rewritten in a vibe way. It just doesn't make much sense, does it?
I mean,
And I
that's
think
a huge
Adobe's going to
software.
be the same thing. I
Yeah.
think you can build features of it, but it's good.
Yeah.
It's hard for me to imagine a scenario. And I think both of us are actually pretty good at this scenario imagining thing, particularly when it comes to rewriting software, because we've spent a lot of time thinking about it. But there are certain
Exactly.
things I think that are just going to be super hard to
Exactly.
replicate.
Especially the one that have like really big like computed power in the backend like that. I don't think it's gonna be really easy. But once again, AI has been very surprising, right, up until now, and we don't know how strong AI is gonna be in 6 months, in 1 year, in 5 years, right?
Yeah.
So let's see. I think that Jan made a good point as well. Like
He did.
Da Vinci Resolved. So just before I answer to you, I was checking like when did Da Vinci launched? Does anyone has an idea? I mean, I cheated, so I checked. But like Da Vinci, give me a second. I need to plug in my headphone. Otherwise, I'm going to lose you, Michael.
Oh, we
But
don't want that to happen.
But Da Vinci, they launched in 2004. So it's been a while. It's been a really, really long time. So that's why, like, I think Adobe has been like basically living almost its entire life with DaVinci that is only $400 one time, and then you can access the software for free basically for your entire life.
And it was originally built actually for sort of high-end production as well,
Yes,
right?
yes,
So
yes.
Jan makes a really good point here
Yep.
too.
And so I've never tried, and I have no idea why, to be honest. Like you pay
Yeah, never tried
100,
it either.
you pay $100 per month minimum on the Adobe Suite. You pay $300 one time for DaVinci Resolve, and I've never felt like I wanted to try. So I'm not sure. Maybe that's the suite of product, because in Adobe you have Photoshop plus After Effects plus Adobe Premiere. There is not only the video editing part, and also the team sharing feature that maybe DaVinci has as well. But yeah, I've never really be willing to try that. And Adobe has already like been living with them, I would say, for their entire life. So I don't think there's a big impact here. Also, something that is interesting with DaVinci Resolve is that they integrate well with all the Blackmagic softwares.
Because it's owned by
Sorry,
Blackmagic.
sorry, all the Blackmagic hardware, so the
It's owned by
cameras.
Blackmagic, yeah. So that's
Yes,
pretty
yep,
straightforward.
yep. So I think that's why they built it. And so, which means that they also have like a hardware parts, right? That we could think that Claude could, for example, disrupt DaVinci Resolve first, because they look like a much smaller software than Adobe Premiere. But because they integrate with the cameras and with the Atem minis and all the gears actually that you use in production, then maybe there is still some motor on that. So that's why I really don't know what's just going to happen to all of this software, because it looks like there's way more stuff going on than just Hubspot or Shopify.
And also, Martin, when did Canva launch? Do you remember? Don't look it up.
Oh, 2011.
Close enough. I'll just say you're right. It's 2013. But the point is that Canva itself was not built really to compete with Adobe per se, even though they say it was. It was more just to sort of democratize the ability to do creative stuff in a way where there were fewer buttons to press.
Yeah.
Right. And it was just more like drag and drop this thing. You should be able to create your own sort of pamphlet.
Yeah.
Canva still cannot do all the sort of really aggressive, very creative stuff that Adobe can do. But there's a cohort of people out there that are happy enough with what Canva does, because they're running a small store in like Melbourne.
Yeah.
And that gets replicated across the globe, right? So that's how that thing.
Yeah, I think, I mean, like a lot of people were saying 10 years ago when Canva launched that Canva was going to kill Photoshop, right? Like the truth is 10 years after, Canva definitely didn't kill Photoshop, because it's for different people. It's not the same client at all, right? And there is no overlap in the use cases. And actually, you can use Canva plus Photoshop
I was going to say.
into your
So
workflow.
in my mind, Canva was actually an accelerator for Photoshop, because you do stuff in Canva and then you're like,
That's it,
hey, you know what?
exactly.
If I want to do a little bit more, maybe I should
Yeah.
do it. And once you get comfortable doing image manipulation and a whole bunch of creative stuff, if you've never done it before, now you're like, oh, I can actually do this, but I need
For
more
sure.
power. I need more customization. I need
Yeah.
more things that I can do. Let's
Yes.
try Adobe Photoshop. Oh, now I can use it. Then you accelerate from Canva into Photoshop.
Yeah.
And I think that's actually driven Photoshop's business and Adobe's business and has not taken away from it.
It's actually really possible. I think over the 10 years of like the coexistence of the two software, I'm pretty sure Canva has actually like brought a lot of clients to Photoshop, exactly for what you described. You are a new designer, you start in Canva, you can do a lot of stuff. 6 months in, you want to do better, boom,
You want
that's
to
the
do
moment
more.
where you try Photoshop. So maybe the same thing can happen with AI, right? Like AI can get to a certain point, right? And so this is going to help people to once again get to a certain point. But then once you want the heavy stuff, you go to Adobe, you go to Unreal Engine, you go to DaVinci Resolve, and that actually drive client to them basically.
But
So
I could also see a situation where, let's just use Photoshop again as a proxy for everything that Adobe does, right? Because it's one of the products that everybody knows about, right? Like if you said Adobe Audition, people are just going to be like, I don't know what you're talking about. But I can see plenty of situations where professionals in the advertising business and the marketing business that have been using Photoshop for years, and somebody inside the company goes, oh, I can rebuild that, or I can rebuild this feature, I can do that. And then they come over and it's like, it's not exactly perfect the way I want it. It doesn't look, so I'm just going to go back to using Photoshop. And then at some point, there's just going to be this like, I'm tired of trying to get close to it. And as Jan suggests, we're using it. Yeah, let's just keep using it. Since it already does what I want, and getting to build to it is going to take way too many internal iterations, and I have other things that I'd prefer that you work on.
And we are at the $100 price point. We're not at the thousands of dollar price point like HubSpot, right? Like HubSpot, when you have too many people who use it, it's so expensive that then you can take this budget to actually build it yourself, and that makes sense. But at $100 price point on Adobe, it's too cheap to be able to be like to justify a big investment into replacing a
Yeah, that's my
workflow that
point
is
as well.
critical for your business, right?
Yeah.
So that's why I think like one very high possibility that happened to this SaaS or to this software is that the price goes down dramatically. Like HubSpot can't charge $1,000 anymore. They can, but maybe they can charge $50, maybe, because at $50, maybe that can help a lot of people. So I think that's also possibility that instead of dying, they just reprice themselves way lower, because they get to be lower to the cost of rebuilding it with AI, which can be really low. But let's not forget that a big part of the population still doesn't really know how to use AI and to use like all of
Right.
these
I mean,
tools yet. So
everybody that's listening to this or watching this episode, including the people in the chat, clearly are technologists that are like
yeah,
deep inside the AI bubble, just like we are.
we have a super audience, Michael.
We do. We have an amazing. But again, you can just like literally, like, I'm not going to speak for Jan and for Max, but like my guess is like their cousin probably is not as good at AI as Max is, and it's just like, you know what? Never mind. I'm just going to keep using Photoshop because it's just easier for me.
Yeah, and also like because we open this budget, let's also not forget that the hosting of an app. So even if you use Cloud, you build your own app, okay? Like it's working super well. Then if you want to share your app, for example, you want to have a CRM that is accessible through 5 salesperson into your team. Okay, great. But now we get to host the CRM
Host it, yeah, and that
in
costs
the
money
cloud.
too.
And first of all, it's not going to be cheap at all. And then who is going to be in charge of
I
maintaining
was
the
just going to say
server,
that if to
right?
maintain it and manage it, and the bigger it gets, the more
Yeah,
unwieldy it gets, and it's like that's the thing that people just take for granted when they deal with a shared and a sharing platform like Adobe. It's like we said, if there's somebody in London, New York, and Tokyo, it's like, who's going to manage that part of it? And if it doesn't work when the guy in New York is asleep, the guy in
yeah,
Tokyo is going to lose his mind if he can't use it because he has a
exactly.
deadline he has to meet.
Yep. And if you have ever tried to host an application yourself, you know that everything goes wrong all the time.
All the time.
There's
It's
always
amazing.
something that doesn't go right. And so that's why I'm so bullish on the hosting part, because even if everything happens with AI, then we are going to need to actually host all of these things, and we are going to need to put everything in the cloud to either be accessible by our clients or by our team. Mm. Yes. Michael, we lost you for a second. Okay, now you're back. Sorry. So
That's okay.
can you say again?
So again, we had somebody on ATP Insights today, right? And that guy was the founder and the CEO of Ragic, which takes, essentially spreadsheets and turns them into sort of database enabled programs. But one of the things I said to him was, how do you handle this idea that then that thing's going to have to be hosted on a server, and if it's shareable and all this other stuff, if it's collaborative, how does all that stuff gets managed? And he said, well, that's one of the big challenges that we have to solve, right?
It is really hard.
Just as we were talking about. So,
and as Matt say, it's possible that at some point we get in a world where everybody has a AI agents, and then the AI agent just use all the tools, right? And so that's why then the tools will need to be ready to actually get the queries, get the integration with the AI agent. It's also very, very possible. At least the people in the tech bubble first, right?
yeah, I mean, look, on an infinite time scale, all this stuff is going to happen. But from a day-to-day sort of operating perspective, we're not on that infinite time scale today.
It'll take some time.
It's going to take some time.
It'll take some time, except if tomorrow Apple Orchestrator, Windows Orchestrator is absolutely insane.
Inside the operating system.
Yeah,
Yeah,
inside,
for sure.
this is the only way for mass adoption of AI agents fast, right? Like something that is super good, easy to use, that even our moms, our
Your mother's
mothers,
very busy with technology, by the
exactly.
way.
Like if my mom one day told me, hey Martin, have you heard about AI agents? Now we're gonna be at a point where, the orchestrator or the access to AI is getting so easy that actually the mass, the massive can actually use it. I think that's the only chance. Is that
I think the world is entering a
Yeah.
completely crazy place if your mother's calling you about like her agentic AI orchestrator.
exactly. But I think it's
And your
possible.
mother's wonderful. It's
Yeah.
nothing against your mom. It's
No,
just
but
like that's going to be a strange world.
she has no ideas about what's going on, right? Like she may be using ChatGPT to I don't know, to do some stuff, maybe to have some recipe,
Oh, stop it. Be nicer than that to your mom.
but she has no clue about what's going on. And so that's why I think the only company today who can get my mom into AI is Apple with the orchestrator directly inside a macOS. If it's harder than that, she will never do it. Really,
Your mother
because
should be in the chat right now.
maybe she is actually. Maybe she is. But yeah, no. If it's harder than that, it's like the mass market is never going to do a terminal command and install something and debug it and all of, and then what do? You code an app and then you leave it on your laptop. So then when your laptop is off, you can't access it. So which means you don't have it on your phone. You can't send your clients to your app. So then you need a cloud hosting. It's a nightmare, really. Like it's not ready yet, right? So
When you travel, you have to take like 4 laptops in your suitcase.
exactly. And
And your
then,
big PC doesn't work at home. Do we know anybody like this?
guys, a little anecdote. And by the way, the grandma touch and Martin is the best joke ever. Imagine Michael,
Grandma's took and
grandma, and
Maxine.
Claude. But last time I went to see my grandma, I took 4 computers with me.
One of them was a Mac Mini.
Yes, and one of them was my Mac Mini that runs all the AI stuff that we have that I use as a server, and I couldn't let it home for 2 weeks, so I just took it with me. So for 12 hours, the time to travel, then it was off, which was so weird. Well, to have no AI at all for like 12 hours, it was like the
It was hard
weirdest
for me,
moment
for
ever.
sure.
Exactly. But then as soon as I arrive, I just plug it in again, and then it worked. But yeah, we are at this point right now that we need to travel with our AI computers.
But it was a problem because your grandmother was token maxing.
And my grandma has tried to use my AI. That would have been really funny. But yeah, but like even though I've shown to all of my family of what I was doing, like they had no clue, like no clue.
No.
Like we realized like how massive the gap was, right? Like they really didn't know anything about what was happening. They were like, "Oh wow, that's cool, but what time do we eat?"
Dinner.
Yeah,
Exactly.
exactly. What time do we eat dinner? Like no clue, no information, no impacts. So
Yeah,
fatal,
it's weird.
fatal.
I think, Martin, I think before we go, we have to live deeply in like a digital environment where, I don't know, pick a number. Like even if you just go into your own relations, meaning your own, your brothers, your sisters, your close family, potentially live in a completely analog world and they don't understand the digital world in which you live, which is
Yeah.
why you can make the joke about grandma's token maxing because it's so unlikely to happen as to be humorous.
Yes. Yes,
Yeah.
and even I mean, yeah. So that's why I feel like let's not underestimate that. I feel like the first layer. I mean, the people like us who follow the news, who use AI. So we are in the bubble. That's what we
Yeah.
call in the bubble. I think the immediate cycle just after us are all of these companies who see what's going on, but it's still really hard for them to get into AI because there's plenty of problems. Governance, like data, security, like what do we do, ROI as well, cost. There's plenty of problems that companies are starting to figure out right now. So they are
Mm.
aware of the possibilities. They know what's possible, but they are starting to implement right now AI. We are still at this stage today, right? Like not every company that knows about AI has implemented AI across their entire organization and is fully efficient. No, we are not there yet at all.
No.
And it's gonna take time before we get to a point where every companies that know about the potential of AI actually AI max, let's say, right? Like they use the full potential of AI in their companies. It will take a long time. And so that's why like before we get to the mass market to actually build AI agent for themselves and plan their trip to Thailand. Yeah, it's not for today. It's really not for today. I believe it's gonna take a long time. Except if once again tomorrow Apple and Windows get something amazing and boom, they give access to AI agents to everybody. That's I think the only possibility here. But if that doesn't happen, I think it will take time before we reach the mass markets.
Okay, Martin, let's leave it there for today. How does that sound to you?
I think it's good. I think it's good. Except if the chat has over like a super
Other
interesting
questions? Yeah.
question. Yeah, no, it's super interesting. Thank you very much, everyone, for
I'm
all
not
of your
surprised though that
questions.
Max's grandma's is token maxing. That makes perfect sense to me.
Whose grandma is not token maxing, my guy?
Exactly. Who can say their grandmother's not token maxing?
That should be a picture that would be really funny, actually.
That should be a meme. If it's not already memed, it should be a meme. We should make it one.
Exactly.
Okay,
Exactly.
everybody. Let's
Yep.
thank everybody, Martin. How does that sound?
Yes. Thank you, everyone.
Okay, let's thank everybody for, again, coming to AGTP Daily. Thank you again for joining us. Thank you for everybody who's watching this later. As always, give us a thumbs up on today's video, subscribe to our YouTube channel, and follow us on all of our socials on X, on Instagram, and on LinkedIn. We love the interactivity. The more people that interact, the better the show is. We will be back again tomorrow at 11 a.m. Eastern Time. My name is Michael Waits. I'm going to say goodbye for now.
Bye bye, Miles. Bye bye, Jan. And see you tomorrow, guys. Bye bye.